Welcome to Smart Stock Watch. Today is 26/2/19. We're discussing Reliance's fourth quarter and full year 2025 results. Joining me is John, senior analyst at Smart Stock Watch. John, quick setup. What did Reliance report and why does it matter?
Thanks. Reliance reported Q4 net sales of $3.50 billion and full year 2025 net sales of $14.29 billion, with record annual tons sold of 6.388 million, the strongest shipments since 2021. The release highlights meaningful operational scale, notable shareholder returns, and an outlook that assumes continued healthy demand heading into 2026.
Revenue and profitability overview. Reliance saw Q4 net sales rise 11.9% year-over-year to $350 billion, driven by tons sold growth. John, what's driving the top line and how should investors read the margins?
The top line was driven primarily by a 5.8% YOY increase in tons sold and slightly higher average selling price per ton. However, margins show mixed signals. GAAP gross profit margin, LIFO, was 27.3% in Q4, down 100 basis points sequentially, largely due to LIFO expense tied to rising aluminum costs. On a FIFO basis, which normalizes inventory valuation swings, gross margin actually expanded year-over-year, reflecting underlying operational leverage.
So underlying operations look healthier than the LIFO-impacted headline.
Exactly. Reliance's non-GAAP FIFO gross profit margin was stronger, and the company highlighted that FIFO gross margin expanded 90 basis points for the full year, a sign of sustained pricing and execution despite commodity swings.
Adjusted EPS consensus and analyst reaction. The consensus coming into the print was an EPS of $2.80 based on a survey of 4 analysts. Reliance reported non-GAAP diluted EPS of $2.40 for Q4. John, how do we reconcile the miss in the company's explanation?
Reliance disclosed a 25 adverse impact in Q4 from year-end LIFO and an income tax true-up. Normalizing for that, non-GAAP EPS would have been roughly $2.65, nearer to management's guidance range and closer to expectations, though still below the $2.80 consensus. On a FIFO basis, non-GAAP diluted EPS was $2.96, showing the business's operating profitability when inventory accounting noise is removed.
So headline EPS missed consensus, but the underlying business performed better once you strip inventory and tax anomalies.
Yes. Investors often need to look through LIFO volatility. The FIFO adjusted results and management commentary point to operational strength, but short-term headline misses can still pressure the stock until clarity returns.
Cash flow, balance sheet, and capital allocation. Reliance repurchased $594.1 million of stock in 2025 and raised the quarterly dividend to $1.25. John, how healthy is the company's cash flow and balance sheet to support buybacks and the dividend?
Reliance generated meaningful operating cash flow, $831.4 million for the year, and still deployed $1.18 billion to shareholders in growth, repurchases, dividends, CapEx. Net debt increased versus the prior year, but leverage remains modest, net debt to EBITDA around 0.9x. So the dividend increase and continued buybacks are supported by solid cash generation, though free cash flow declined year-over-year. Investors should watch quarterly cash conversion and debt trends.
Any red flags in liquidity or leverage?
Total debt rose, partly from financing activity, but coverage metrics remain healthy. The company still had $216.6 million in cash and sizable availability under its repurchase authorization, so near-term liquidity looks adequate.
Business mix, end markets, and guidance. Reliance highlighted strength across infrastructure, data centers, energy, and defense. What does management expect for Q1 2026?
Management expects first quarter tons sold up 5 to 7% sequentially and average selling price per ton up 3 to 5% sequentially. They guided non-GAAP EPS of $4 to $54.70 for Q1 2026, which factors in a 25 is expected LIFO expense. That implies meaningful sequential and year-over-year earnings growth if volumes and pricing hold.
How much of Reliance's performance is cyclical versus structural market share gain?
Reliance attributes results to both. They captured market share, plus 2 percentage points to a 17% domestic share, while also benefiting from healthier end-market demand. Their scale and value-added processing capability help in both cyclical recoveries and win permanent share.
Risks, management commentary, and leadership takeaways. CEO Karla Lewis provided commentary in the release. John, what were the leadership takeaways and what risks did they call out?
Karla Lewis emphasized strong operational execution, record shipments, and market share gains. She noted Reliance's scale and diversified model as strengths going into 2026. Management also flagged risks: trade policy uncertainty, commodity price swings, which drive LIFO volatility, and macroeconomic factors that could affect demand. They reiterated disciplined capital allocation, investing in growth while returning capital to shareholders.
Any specific management quotes investors should note?
Yes, Karla said the company is operating in a healthy demand and strong pricing environment and is excited by the opportunity to continue our profitable growth journey in 2026. That's bullish, but management also explicitly pointed to trade policy and commodity price risks in their forward-looking statements.
Key takeaways. John, wrap this up. What's the investment takeaway for Reliance from these results?
Reliance shows solid operational momentum, record annual tons sold, market share gains, expanding FIFO margins, and a continued shareholder-friendly capital allocation program. The headline EPS missed consensus due to LIFO and tax true-up impacts, but underlying FIFO profitability and strong guidance for Q1 suggest the business is on healthy footing. Key watch items for investors are commodity-driven inventory accounting swings, cash flow trends, and trade policy risks that could affect demand.
Thanks, John. That's Smart Stock Watch. Thanks for watching. If you found this useful, please like, share, and subscribe. Tell us in the comments, do you see Reliance as a buy after this print?